Hello and welcome to another session of Informally Formal. Our today's topic is very timely and very important and interesting. We're going to be talking about business continuity and the digital transformation. And to talk about this very important subject, we have someone equally important. His name is Shafqat Anwar. Let me just briefly introduce Shafqat to our audience here. Shafqat is currently Deputy Group CEO, Operations, Technology and Support at Ahli United Bank in Manama, Bahrain. He started his career with Grindlays Bank in Dhaka in 1984 and then had been overseas since 1987 with various international banking roles in senior management positions. Ahli United Bank, by the way, is one of the most respected banks in the region with a consistent track record of performance over 20 years since its inception in the year 2000. It is currently represented in 8 countries, including Bahrain, the United Kingdom, Kuwait, United Arab Emirates, Oman, and Egypt. So without further ado, welcome, Shafqat. It is a pleasure to have you.
Thank you very much, Akber. It's a pleasure for me as well to join you. Today I've seen some of your programs. These are very interesting. Thank you.
Right, Shafqat, let's dive straight into it. As you know, Shafqat, the pandemic hit us without any warning. No one predicted the accelerated pace of global impact. What, according to you, was the level of impact to organizations worldwide? Over to you, Shafqat.
Yeah, thank you. The impact, obviously, as we all know, it was tremendous. First of all, nobody was ready for it, so it spread very fast, and it impacted, almost every industry. And the impact here is that very seldomly we see that both supply and demand, the supply chains and the cash flow, and almost every process is involved in the business got impacted. Other than the essential goods, almost everything. So the groceries and food items were not impacted that much. Pharmaceuticals and health industry obviously was in the most in need. But otherwise, the impact was tremendous. And more importantly, what we have seen here, the small and medium scale industries were hit the most.
You're absolutely right. The one other industry we've seen a tremendous growth in is the information technology arena. That it was a boon to the information technology industry, as I'm sure you know. But you also aptly mentioned that, if you compare with past such business disruptions, like what comes to mind is the 2008 financial crisis. It was basically a demand side collapse. The supply of the instruments were there, but it was a demand side collapse. And you very aptly pointed out that this time it's on both sides, supply as well as demand. So very something that we hadn't seen very much in the past. So Shafqat, let me just ask you, how did your business, and I know your bank, you guys have, I believe, almost a $40 billion asset organization. You have your footprint in multiple countries. How did your business get affected? Just very quickly, then we'll go on to the next phase. Next question.
Yeah, our business basically, the normal, first of all, for the employees, what we had to do because of the social distancing and the other health security reasons, we had to immediately we formed a crisis management team, and we decided that it is not safe for all the employees to come to office. So we initially started around 50% of the employees working from home, and then gradually at one point of time it went up to 75%. And then also what we did, we actually did a simulation for 3 consecutive days, keeping everyone, all employees at home, to see that whether we can manage our work on a completely remote basis. We found out that 96% of our work we could do on an emergency, on a contingency situation. We can work from home. 96%. Only 4% are related to trade finance, some of the checking of documents and issuance of guarantees, where you have to be physically in the office. Other than that, so this is one test. But imagine if this happened, this pandemic 10 years back or 15 years back, the technology was not this advanced. 4 or 5 years back, we embarked on a major digital transformation kind of initiative. And as you know, globally, most of the banks have been doing that. Most of our through our internet banking and through our B2B, we have our own internally developed system. We connect our corporate banks and SME customers. So they could, from their offices, from their homes, you are able to send all their instructions, their payrolls, their vendor payments, their any other international or local funds transfers, even the trade finance requests. So everything we are able to process remotely through enhanced controls, actually. And then the other issue here is, in a situation like this, the cybersecurity concerns also become high, because the more digital you become, you are getting more exposed on the cyberspace. So we had, at the same time, we are also equally kind of investing our resources on ensuring and strengthening our information security controls. So this is from the business. The other aspect was more important issue for business. This is not exactly my direct responsibility, but to maintain the liquidity. This is very important for businesses. So our priority was as such that the moment this pandemic happened, we formed a crisis management team. We started meeting on a daily basis, the senior management team consisting of 8 to 10 people. And our priority was to ensure that the customer services cannot be disrupted. This is number one. The number two is, at any cost, we have to maintain our liquidity. And third one is kind of secondary, but to look at, because we knew that the impact on the business profitability and bottom line will be there. So any unnecessary additional costs, we looked at curtailing the cost, looking at rationalizing the cost. So those things also we took into consideration. The view is, and this is what the global economists and the financial services industry people are saying, that the real impact will be felt probably from this second half of 2020 and 2021. There will be a way to come out of this, but 2021 probably will be a difficult year. Most of the banks have reported around 20% less profit during this quarter on a year-on-year basis.
Well, Shafqat, you went through and covered quite a bit, really. Our topic of interest, obviously, is business continuity. So
yes,
this has opened our eyes to how every business should be prepared or have a game plan in place for business continuity. That's critically important. And the role that the digital transformation and digital readiness is going to play in the future. Worldwide, countries are now flush with liquidity, but that's basically Western world countries in particular have the luxury of printing money. So, the impact of that, and that of course is another topic for another day, Shafqat, but most other countries, if they start printing money, of course, it leads to inflation. Nevertheless, you hit on a lot of important points. But let me move into what do you think businesses that were comparatively less technology dependent or less technologically prepared in terms of business continuity, what do you suppose their preparedness ought to be like, or what should they do to prepare for the future in case of such adversities?
Yeah, actually, the businesses which were not very digitally oriented, they must now look internally. They need to review their business model and try to digitalize, try to move to the electronic means as much as possible. Their manual processes, wherever possible, the repetitive work that should be digitalized, and particularly if there is it's a customer service oriented company, they should try to digitalize that aspect of the customer communications, customer delivery as early as possible. Because, this pandemic has not only accelerated the digitalization process, but what will happen is the business models are going to completely change post-pandemic. So it will be quite a different world. Many companies are now finding out that, do we need all these physical premises? The banks, even the bank branches and all this. So that is going to be on the commercial properties, that's going to be an impact. Also, if many people start working from home, the transportation, the demand on the petroleum and other energy sources, that will be reduced. So overall, there will be a readjustment in the global economy and the way the businesses are being done in the future. There is a major shift in the thought process of the businesses, and I think, and this will be, this impact will be everywhere. So we'll see that the pace of digitalization will significantly be enhanced in the near future.
Let me interject here real quickly. I know you oversee the technological side of business with your institution as well. Now, do you see technology as mostly buying technology tools and IT driven, or how do you see it? How a business ought to look at technology deployment?
Okay. See, 3-4 years back in our bank, I can give an example. Most of the technology IT initiatives were basically driven by the IT department. And they were sort of bringing in solutions, okay, and then talking to the business units and saying, okay, let's implement this. And it's more an IT driven and IT vendor driven thing. What we have done over the past 1.5 years, 2 years, we said that no, businesses are the owners of the technology process. And the initiatives and ideas will have to come from the business. IT is only the facilitator, the IT department. So we have our own, there is a major shift in our the way of looking at things. So basically, the businesses will have to find out what are the and what we have done. Every unit now, our corporate bank, our private banking, our treasury, and our retail bank, we have given them assignment. You find out, you review each and every process, and give us the your recommendations of what are the processes need to be digitalized, what are the priorities which are to be done in the next 3 months, which are to be done in the six months, and then 6 months and beyond. So this is what we've been doing. We are even for the operations areas also, we are identifying all the processes which are not yet been automated, and we are automating them. So these will have to be driven by the business.
What do you think would take for the mindset transformation, where people don't, businesses or otherwise, they don't think of these things as just IT buzzwords and stuff like that? How do you get it into the mainstream thinking that this is essential for business continuity as well as it's a necessity of the future?
Yeah, so this is what in the organizational culture it has to be, that IT is not the business of IT. IT is everybody's business. Exactly. So IT, the information technology and the digitalization, this has to be the ingrained culture within the organization. So in a matter of another, I think probably 1 to 2 years time, you'll not be able to separately identify IT. It will be so intertwined with the process. It will be an integrated process of the business.
You're going to see a change at a pace that used to happen, let's say, over a 10-year period. Now we're going to find it happening within a year or even less. The pace is going to accelerate considerably. Let's move on very quickly, Shafqat. I would like to get your views on what would you say are the pillars of business continuity?
Pillars of?
Pillars of business continuity, or if you could give give us a few, what do you consider as most important in terms of having a good business continuity plan?
The first thing is obviously the uninterrupted customer service. If you are in the customer service industry, it has to be uninterrupted customer service. This is number one. And then the very basics of your business, you have to maintain, which I earlier mentioned. your liquidity, your asset quality. These are need to be maintained, and also the contingency arrangements. For example, if for any reasons, if you're not able to access your premises or your businesses, what are the other alternatives? So this is where the digitalization. So digitalization basically is one of the key pillars of business continuity now.
Shafqat, I couldn't let you go without asking you very quickly, of course. You know, I don't know about Bahrain, what kind of interest payment moratorium or loan repayment moratorium has been put in place by the government. But as you know, in Bangladesh, interest or repayment moratorium goes to, I believe, September. So when that government initiated moratorium is, if it's not extended, then all of a sudden in the last quarter of this year, tremendous amount of repayment is going to come due. And I know bankers, and I've talked to senior bankers here in Bangladesh, and they're really reeling and very concerned. Anything of the sort happening in where you're at?
Exactly. So our moratorium was for 6 months in the Gulf, most of the countries, from 1st of March to 31st of August. During these 6 months, you cannot charge the installments and cannot charge any interest. So what will happen is now in September, the customers will be paying only the September's interest, and so there is no extra pressure. You know, you don't have to for the past 6 months, you know, the interest or increment, your installment you're not paying. So that way, the pressure is much less. So this 6 months was a breathing space.
Shafqat, very quickly, let me just so that my viewers understand. So was that tagged on to the end of the loan term, or was it just forgiven?
See, there are discussions going on with the central bank about that whether this will be, so it will be basically the 6 installments will be added with the loan term, but without these 6 months, they will get basically the interest-free period. So these interest they are not going to pay. So last 6 months, there will be added 6 months. Yes, you are right. So tenor of the loan or the facility will expand by another 6 months. Yes.
Right. As you very well know, Shafqat, there is no such thing as a free lunch. Someone has to pay somewhere, obviously, right? So
yeah,
either you accrue the interest, and you know, because you're not gonna, the bank is not gonna take the hit by not having, because interest is their income, right? So
no, but this 6 months interest we have to take the hit.
Oh, you have to take.
We have taken the hit. Yes.
Oh, I see.
Yeah.
You know, Shafqat, there is so much more I want to talk to you about. You know, especially the implementation of IFRS 9, and you know how banks in United States have taken a significant reserve. And
yes.
What do you think is you know the appropriate amount of reserve that you need to put in place for this particular situation? Very quickly, if you could reflect on that, because we got just barely.
Yeah, it's quite a broad subject, but basically what has happened is, you know, the cost of capital has increased significantly after the particularly Basel III and IFRS. So it is now one of the more important things is after this 2008-2009 financial crisis, that the liquidity of the banks and the capital base, you have to have the buffer, you know. So that is why you know it is very important that, and this was our immediate concern immediately after this pandemic, that we have to maintain our liquidity level and our capital base, as and if necessary, we are ready to shed off some assets actually, if it is required, but at no cost we can compromise the liquidity. So this is an important thing. This is a very important thing for businesses to continue actually.
Right, Shafqat, you know, I'm sure we will get back together on several more occasions in the future to discuss a lot more than the brief time that is allotted in any given session, you know. It was lovely talking to you. It's It's been a pleasure. And like I say, you know, I would leave with an invitation to you to bring you back on several more sessions. And I would like to thank our audience for joining us today. And with that, I would like to sign off right here. Stay safe. I'll see you next time. Bye-bye.